tax-free. I was told that if I say tax-free a lot in this video, that'll help with the algorithm and maybe we'll get some more views on here. But really, if you like the content that we're putting out, go ahead, let's get it out of the way. Like and subscribe, please. Today, we're talking about how to create tax-free income, or really how to save tax-free for retirement. In the video today, I'm going to talk about 3 different concepts around tax-free retirement. Really, the first thing we're going to talk about is something you may or may not already know about, but it's the most traditional way of planning for retirement. The second is not fully tax-free, but a way to lessen your tax burden from that income that comes in. And the third method you may not have heard about, so you're going to want to stay tuned. Let's start off with the bread and butter, easiest ways to save for retirement, right? IRA, individual retirement account, or 401k. Those are your 2 most common ways, but you want tax-free. Well, how do you get tax-free? You pay the taxes today and you opt for the Roth option. Roth IRA, Roth 401k. All the dollars that you put away in those accounts will be saved. You have already paid the tax and got it out of the way, so that as you build for retirement and you start taking distributions, you're not paying tax on any of those dollars. But it doesn't end there, right? So let's think of all the different things that are out there and the things that people are trying to do. So tax-free has some limitations. If I do a Roth IRA today, well, I get income out, meaning if I earn too much money, I can't contribute at a certain level, right? So, but even if I can contribute, I can only do in a IRA up to $6,000 a year right now. I could get a little more in a catch-up provision if I'm over 50. But right now, for the majority of you watching this channel, it's probably going to be $6,000, right? And that may be great, right? That may be all that you want to contribute towards retirement now. But are you saving in other areas? And what are the things that you're doing? If you have the 401k option, you can get up to $19,500 into the Roth option through a 401k. But even at that level, it might not be enough to get you to where you want to be in retirement, because you may not want to retire at 65 or 70. You might want to retire at 59 and a half when you can start taking distributions. Some of the options that people are looking at for retirement, a lot of people like real estate. Well, why do I want to do real estate? It's not tax-free, but there's definitely tax benefits that you can get from owning real estate as an investment, i.e. a rental property, Airbnb, those sorts of things where you're earning income from that asset, but you're depreciating it against the income you've earned, right? So you depreciate it over time. Maybe you do 1031 exchanges, all these different things that are available in the tax code to help lessen your tax burden on that investment. Another thing that you can do is in purchasing stocks inside of a brokerage account. If you buy a stock and you hold it in that account, you won't pay any tax on that capital gain until you sell it. Well, what if you buy a stock that pays dividends? Well, every year you'll pay tax on the dividend, but generally, and check with your accountant, depending on the type of company you own, you could get taxed at a lesser rate, so lowering your tax burden on the dividends that you're receiving. So again, you got to run that by your accountant, but having dividend income could be taxed at a less of a rate than your actual ordinary income that you earn every year, or the distributions that would come from a traditional 401k or IRA. The last option I want to talk about here, you may have heard us discuss before on this channel, right? It's this idea of using life insurance. Well, what does that mean for a tax-free retirement? If we look at permanent life insurance that builds cash value, i.e. whole life insurance or index universal life insurance, both of those permanent types of life insurance have a component that builds cash value. the money that we put into that, just like our Roth account, we've already paid taxes on, right? So we get rid of the tax. All of the growth inside of that account is really deferred, so we're not paying any tax while that account's growing. And when doing distributions, if we do it the proper way and we start taking money out of this life insurance policy, right? Instead of just leaving a death benefit, we create an income stream from that life insurance policy. We can create a tax-free income stream. So why is that important? Well, what if you're maxing out on your Roth contributions or maxing out on your 401k contributions, but you've done all the calculations and you've figured out that you need to save a lot more to get to where you want to be, but you want to make sure that that money is tax-free? Well, life insurance could be a great option to put more savings into so that you can create a greater tax-free income when you get to retirement.
Hey, what's up, everybody out there? Listen, I got 60 seconds. How does infinite banking work? Well, if you overfund a cash value life insurance plan, which, by the way, gives you not only by state law, by contract, a guaranteed rate of return, it grows, it comes back tax-free up to basis, borrow from beyond. You get protection from lawsuit as well as inflation and interest rates. Now, as you're building up your cash value, right, you borrow from the cash value, you buy a piece. Here's an example. I'm not suggesting it. But you buy a piece of real estate. That real estate gives you rental income, depreciation, appreciation, and cash flow. Take that rental income and have that pay back your policy. Now you've created an infinite banking model.
The idea of doing the calculations, hopefully you've done them. If not, go into the description box. We have a free cash flow analysis guide that will help you figure out where you are today, right? The income coming in, the expenses going out, any debt service that you have, as well as the savings that you're already doing, help you get everything kind of lined up. It's free. Go ahead and get that for yourself. And there's more education out there. We actually did a whole video on figuring out what your numbers are. So go ahead and check that out.